Welcome to the Deep Dive.
Great to be here.
Today we're digging into the stock market action from Wednesday, April 16th, 2025. We're using a summary from Grok Trade as our guide.
That's right. We've got info on the big U.S. indices, some key economic points, and what happened with crypto and metals.
Yeah, and our aim here is really to pull out the main insights, help make sense of the day's dynamics without getting totally bogged down in all the numbers.
Exactly. Cut through the noise and find the story.
Okay, so let's start with the big headline. A pretty significant sell-off in stocks. The S&P 500 dropped, 2.2%?
S&P down 2.2%, Dow fell 1.7%, and the NASDAQ, took a bigger hit, down 3%.
Ouch. And the Russell 2000?
Also down, but a bit less, 1%.
So across the board weakness, anything specific jump out about those drops?
Well, Grok Trade pointed out something interesting with the NASDAQ. It seems it got rejected right at its 20-day moving average.
Okay, that's like a short-term trend indicator, right?
Yeah, exactly. And it also failed at a resistance trend line they'd flagged before basically a price ceiling it keeps hitting.
So failing to break through those levels, what does that signal, potentially?
It could suggest, weakening momentum, maybe some growing pessimism in the short term. If it can't push past those levels, it might hint at more downside pressure.
Gotcha. And what about trading volume? Grok mentioned that was higher during the sell-off.
Yeah, higher volume on a down day often suggests more conviction from sellers, like more people were actively pushing prices lower.
Right, conviction, but is it just a blip or something more?
That's the key question, isn't it? Like Grok said, we need to see if this volume, this selling pressure, continues. Is it just a one-day thing, a pullback, or maybe the start of a bigger move down?
Makes sense. And with this volatility, Grok Trade really hammered home the need for disciplined risk management.
Definitely. A good reminder for everyone in these kinds of markets.
Okay, let's shift a bit to the economic side of things. Trade policy uncertainty seems to still be hanging over the market.
It does. Even though there weren't, any big new tariff announcements yesterday, that underlying uncertainty just weighs on sentiment. It acts like a bit of a drag.
So it's kind of a background hum of worry for investors.
Precisely. It shows how these broader geopolitical factors really play into market psychology.
There was some potentially good news, though, right? Import prices fell in March.
Yes, they did decline, mostly because fuel costs came down. And that could help ease some inflationary pressures down the line.
Okay, so a positive sign there.
It is. But you have to balance it, The New York Fed's manufacturing index, the Empire State one, it's still showing contraction.
Ah, right. Even if it wasn't quite as bad as maybe forecasts suggested.
Exactly. Better than expected, but still contracting. So it's this mixed picture, some potentially good signs on inflation, but manufacturing activity still looks sluggish.
So a bit confusing for investors, maybe. A mixed bag.
Definitely. It really feels like folks are waiting, watching for the next batch of economic data to get a clearer read, especially on how trade policies might actually be impacting things.
Okay, makes sense. Now let's talk about divergence, because Bitcoin actually went up slightly, right? Like 0.8%.
Yeah, which is interesting given the big equity sell-off, although it's worth noting it's been stuck in a pretty tight trading range for about 5 days now.
So it bucked the trend, but maybe isn't making a decisive move either. Any thoughts on why?
Could be a few things. Maybe some see it as, disconnected from the usual stock market worries. Or maybe it's just consolidating, catching its breath. Hard to say for sure.
Fair enough. But what wasn't ambiguous was the move in precious metals. Gold surged.
Oh, yeah. Gold jumped 3.25%, hit new all-time highs in futures trading, nudging up near $3,400.
Wow. And silver?
Silver was up too, about 1.2%. So a strong showing for both.
That really screams flight to safety, doesn't it?
Absolutely. When stocks are shaky and there's economic uncertainty floating around, investors often pile into gold and silver. They see them as, safer stores of value.
Right. It really underlines that risk-off feeling we saw in the stock market.
Exactly. So wrapping up Wednesday's action, it paints a picture of, cautious investors. Equity markets are down, likely reflecting those ongoing trade worries and the mixed economic signals we talked about.
And the strength in gold and silver really drives home that search for safety. Bitcoin. Well, Bitcoin's doing its own thing, which adds another layer.
It does. So I think the key takeaway for anyone listening is just that reminder. Markets can be volatile. Staying plugged into the economic data releases and trying to get a sense of shifting investor mood is really crucial.
Definitely. We hope this quick deep dive using the Grok Trade summary gave you a clearer view of yesterday's key happenings. It's worth thinking about how these moves, these economic crosscurrents, might ripple into areas you follow. What questions does it spark for you?
Yeah, and that contrast between stocks falling while gold surges and Bitcoin kind of holds steady, it really highlights how complex things are right now. Makes you wonder what other unexpected turns might be ahead for the markets.